Hello everybody, I'm Patty Patane, and today is going to be a very intelligent and very educational program about mortgages. If you want to buy a new home, the importance of becoming pre-qualified. Before you ever go look, have an idea of the price in mind, and then call Travis, whom you're going to meet, and get pre-qualified. That's the number one important thing you can do. Number two, we're going to talk about refining. Let's say you're in your home, you want to get a lower interest rate, or you want to get a better deal, anything. Again, you're going to talk to Travis. And then if you are 62 or over, hello, you might be interested in a reverse mortgage. You hear a lot about selling you reverse mortgages on television, and they can be very misunderstood. And we're going to clarify that today because Travis is your new best friend. And the neat thing about it is that when you're dealing with Travis and the Bank of California, you are dealing with the money. Travis doesn't have to go someplace else and submit all the paperwork. He walks into another room, submits it to underwriting, and it's done right there. And you're going to meet those people. So first and foremost, you're basically selling me money.
That's all we do, is we move money from investors' hands to the borrower's hands.
And you do that directly?
Absolutely directly.
So when it comes right down to it, if there's an issue or if there's something about this underwriting mystery,
correct,
you're it.
Well, I'm the source to the underwriting mystery.
That's right, because you walk down the hall.
Correct. They're right in the office right next door to me. There's a big room with a bunch of underwriters in there that they're the ones that actually qualify the loans for you guys.
And you're going to meet them. We're not keeping anything back here. It's very important. First of all, tell me the absolute importance of pre-qualifying, and tell me how that kind of works.
Well, today's market, there's more of a shortage on houses than buyers these days. So when you walk into a home with your realtor and you're going to submit an offer, the realtors on the other side, they want to see that you actually can afford to buy that house. They want to see that you qualify to buy that house. So
the days of looky-loos are not right now.
Well, there's lots of looky-loos out there, and if you don't have a pre-qualification letter, that's what the selling realtor is going to look at you as, a looky-loo. Whether
right.
You're interested or not, whether you're serious about that house or not, you're a looky-loo if you don't have a pre-qualification letter with you.
Okay, so I come to you and I say, Travis, I have an idea what I can spend. I don't have an exact idea of the house yet, but I have an idea what I can spend. And let's take it for the average price in this region of the Coachella Valley. The average price of buying a home here, whether it's a used house or a new house, what are we looking at?
You're looking at $200,000 to $300,000 for your average single-family residence.
Okay, so let's take it in the middle. Let's say $250,000. Okay, now you have like a menu of loans.
Okay.
You can choose from things that will fit.
Absolutely.
That will fit me.
Right.
Okay. So the first thing I do is I call you up, and here's your phone number, here's your email, and say, Travis, I'm looking for a house that I think I can afford in the neighborhood of around $250,000.
Sure.
Can you qualify me?
Sure. What I'm going to do is you're telling me what you think you can afford based on payment.
Right.
Okay. And what I do is take what you make, what your income is, and calculate that. What we use is called a debt-to-income ratio to verify that you can afford that property, and then based on that, I tell you what's the maximum loan amount you can.
Okay. Well, we're going to look at the numbers of what it takes to qualify for $250,000 plus or minus, and you're going to tell me what those numbers work out to be. Then we're going to show you some examples of some homes that are currently available on the market and the realtor you can get them from.
Hi, I'm Richard Nolan, broker-owner of Nolan Real Estate. When I started my company, one of the things that was very important to me was the ability to offer our clients a variety of options and simplify the buying and selling process. Using today's technology, we are able to do just that. Imagine being able to have a signed offer by you within minutes of a hot new property, hitting the market, or accepting an offer on your home while away or even overseas. That's exactly the type of services we provide to our clients. I'm proud to say that I've been a lifelong resident of the Coachella Valley. I work closely with Travis at Bank of California. Please call Travis to pre-qualify you and provide a proof of cash down payment ready to be placed in escrow. Doing so will allow me to treat your offer like a cash purchase. This gives you the same advantage as anyone who brings an all-cash offer. Feel free to give me a call at 760-219-1357 to search for homes or see what past clients have to say about us. Check out my webpage.
Now, Travis, I want you to walk me through the process of what you're going to do for me. I want you to tell me what you're going to do for me.
Okay.
That's most important.
Okay.
And I'm looking at trying to buy a home, let's say $250,000. What do I need to qualify for a loan to buy a $250,000 home?
Well, initially, what I'm going to have to do is get some information from you. I need to get your basic income information.
So how much do I make?
Yes, and then I need to run your credit.
Okay.
So I need to verify that you do qualify based on credit
Okay,
standards.
now that's pretty important today.
Absolutely.
If my credit score is not, what is it, 580, 580 is the absolute minimum score for your credit that Travis has to work with.
And that's based on the Federal Housing Administration guidelines.
Right. So these are all federal guidelines. Nobody else can do any better, and you don't want to look any farther than Travis because I trust him implicitly. He'll give you the best possible deal you can get anywhere, and he'll do it as fast as anybody can do it because they're the bank, and this is a government-insured loan,
Absolutely.
so you have to make it qualify. Okay, what are you going to do for me? I want a house of $250,000, and you're going to send out and you're going to ask me some questions.
We're going to send out a welcome
Okay,
package.
how much do I make?
Right, and to establish that, I need 1099s and W-2s or Schedule Cs or whatever, your complete tax returns
And
for
you
the
send
last
me a
2
list
years.
of what I have to do.
Absolutely.
And I just email this back
It's
to
a
you
very
or
simple
fax
list.
it back to you. Okay.
It's a very simple list of about 6 or 7 items. I'm
Okay.
gonna need from
Let's
you.
say my income comes in at $4,000 a month. Is that pretty average for people, about $4,000 a month?
$4,000 pretty average.
Okay, so let's go with an average income of $4,000 a month.
Okay.
Now, what is the minimum down payment I'm going to be able to have to come up with? That's cash in hand to put down here in order to come up with somewhere I can qualify as long as my debt isn't too much.
The absolute minimum you're going to be able to put down on any property is 3.5%, and that's what the Federal Housing Administration or an FHA loan has set forth to make qualifying for your basic borrower as easy as possible.
Now, we're going to generalize here. This isn't going to be exact, but it's going to give you a very good idea of what Travis has to go through to make sure that you can get the right mortgage and you can get into the home that you really want. So I'm going to start with the fact that, let's say I want to get into a $250,000 home. That's what it'll top out with all the costs and everything for the house, $250,000. Now, one thing for sure, and I've learned this from you, Travis, and that is that if you have a credit score of less than 580, don't waste your time. Do not bother to call and see if you can get a mortgage, because you can't. Not from any place unless you're looking at a hard money lender. It's going to be 11%. You'll be in foreclosure and bankruptcy before you can say, I made my first payment. That's how it works. That's a fact of life. And I don't want to mess around here. I don't want to waste your time, and neither does Travis. If he gets a phone call from you, he really wants to help you, and he wants you to get the house you want, or the refi, or the reverse mortgage if you're a senior. He's here to help, and I'm here to help him qualify and clarify everything that you possibly can ask. So let's go for it. Get me into a $250,000 house. My credit score has to be 580 or more.
580 or more.
Okay.
And if you're not sure about that, if it's a situation where you're not sure what your credit is,
Well,
you
you
might
run
be or
it.
might be. I can run it. We know within 5 minutes what your
Right,
credit
and
score
it
is.
doesn't
So don't
cost,
be afraid.
I don't have to pay for that, you pay for
I'll
that.
take care of that.
Great. Okay, so my income, let's just hypothetically, my income is $4,000 a month. Okay, now you run your numbers and everything, and how much is my down payment going to be on a $250,000 house?
Well, again, if we're going with an FHA loan, then you have a minimum requirement of putting down 3.5%. So that's the 3.5% is all you will have to bring to the table
Okay.
on an FHA loan.
If you can qualify me.
If I can qualify
Okay, and
you,
that'll
which-
be how much?
That'll be $8,750. That's 3.5% of $250,000.
Okay, and if you haven't got a down payment like that, folks, you don't belong buying a house.
True.
There are some facts, some hard facts. And I'm not going to sugarcoat it. I'm not going to tell you there's anybody else out there that can make this look any better or any more fancy. There isn't. Okay, we're going to the actual bank here. And Travis has a lot of years of experience, and I've known him for 15 years. He knows what he's doing, and he wants to help. So
One thing that's important to understand, though, is you do need the 3.5% down. However, gift funds are acceptable on an FHA
So
loan.
let's say I have a nice uncle or a mommy or a daddy that wants to help me out with a little more money. The more, the better, because the more money you put down, the less your monthly payment's going to be.
Absolutely.
Okay, so I put $4,000. I have a $4,000 a month income, and I put almost $9,000 down, and my payment works out with and the interest rates, folks. The interest rates are going to go up, they're going to go down, they're going to go sideways, they're going to go every which way. So don't pay attention to these people that say, you better hurry up and get it right now because the interest rates are going to go up, probably, but they might go down. You just don't know. I mean, you've seen it go all over the place.
That's what it does, and ultimately it changes every single day. Every bank in the industry, including mine, bases their rates off of what the bond market's doing at the time. So
and you have the who's the person at your bank that shows us those screens? Who is it?
We have a secondary department.
Right.
There's a couple guys in there that what they do all day long is
look at-
they hedge the market and watch what the 10-year bond is doing.
And that tells you how much money you can afford to sell your loan for.
It gives us, right, exactly.
Yeah.
That's where the bank makes its money. We don't make our money from the borrowers.
No.
We make our money servicing the loans and insuring them on the secondary
Right.
market.
So everybody's playing by the same numbers here, ladies and gentlemen. Every single mortgage giver in the world is playing by the same numbers. So we've got the same numbers. So
The differences are where bigger banks have bigger expenses, so they have to keep bigger margins.
Right.
We're a smaller bank. We have smaller margins. So
can
typically
you give me a better deal?
we typically have better pricing
Okay,
than
so you can give me a better
other
deal.
banks out
All right,
there.
now, so we're going to quote a mortgage interest rate here, 4.25%. Oh, you're thinking, well, I heard on the radio that I could get one for 2.8% or 3 point something percent. Yeah, right. There's reasons for that. And it's got to be $1 million loan. You have to have a credit rating of 800 plus. You have to put down 50%. I mean, there are all sorts of things. So let's get realistic, okay?
It's that part of the
Yeah.
commercial at the end where the guy starts talking really
Real
fast. and you can't
fast. Yeah,
understand
the
what he's
little
saying.
fine print, we have no fine print, and we're not talking fast.
Yeah.
All right, so 4.25%. Sort of kind of. So what's my payment going to be with my insurance, my
Okay.
mortgage insurance?
Exactly. Remember, based on the FHA loans, you're putting 3.5% down, which
Right.
is to help you get into the house, but
Right.
that does also imply that you will have to pay mortgage insurance.
Right,
So
which is a couple $100 a month.
it is. So
Okay.
based on your principal and interest payment, you're paying $1,207 a month for the principal and interest payment, and your ultimate monthly payment is going to be $1,478 for
Okay.
your principal,
Now-
interest, and mortgage insurance.
But according to what I've learned, if I have more debt on my credit report, in other words, I have a car payment and some credit cards and some revolving things like that, and it amounts to more than $700, this ratio you talk about in order for me to qualify for this loan, I can't get the loan.
Well, we discussed the option based on $4,000 a month
Mm-hmm.
income and a $250,000 property that you wanted to purchase.
Right.
So based
And
on
only 3.5% down.
and 3.5% down, correct. So based on those figures, what we have to do is we have to qualify you and make sure your debt isn't too high for your income to qualify.
What you want to make sure is that you're going to get me a mortgage, and it's going to require a payment
Correct.
that I make every month. And you want to make sure I can make that payment.
We want to make sure
and
you're
make it
comfortable with that
easily enough that 4 or 5 months down the line, you're not calling me up and saying, "Hey, Patty, you're late."
Right.
I mean-
and again, these are set by these guidelines
Right.
for how much you can borrow are set by the Federal Housing Administration for an FHA loan.
So what you want out of somebody like Travis is you want trust, and you want to get it as fast as possible, and you want to know what's expected of you so that there's no surprises. And this is what we're doing right here. I just want you to get to know the man. He's really nice, and he's good at what he does. So that's the intake, and then you do all the preliminaries, and you have to get the paperwork, of course, and then you pre-qualify.
Correct.
How long does it take for you to pre-qualify me?
Well, once I get the basic information from you, I can have a pre-qualification done in 15 to 20 minutes.
Really?
Absolutely.
That fast?
I can have a pre-qualification letter back to you via email within the half an hour to an hour.
Which means I can take that letter,
Correct.
go to the realtor and say, show me what I can buy for my $250,000 that I've already qualified for.
Correct.
And here's an example of what you can buy in this Coachella Valley region for $250,000.
Hi, I'm Anthony Bauer with Anthony Bauer Broker. I'm here for all your real estate needs, anywhere from land to residential homes. Please put your confidence and house in my hands and I'll take care of it from there. Here's an example of one of my properties. I have a newly listed home in the North Indio community of Talavera. It's a very nice home, just a little over 2,000 square feet. This house boasts 4 beds, 3 baths. It is an entertainer's delight and it's priced at $260,000. This house is a little higher at $415,000. It's located in the Ponderosa Villas at Paradiso. It's a private walled and gated community situated in Indio, California. This 3,000 square foot plan shows like a model with many of its upgrades such as custom paint, tile flooring, granite counters, beautiful maple cabinetry with hardware detail, as well as recessed lighting. When you walk outside, you are in your own backyard oasis with saltwater pool and tanning shelf, pavers, glass fireplace, and low maintenance landscaping. Across the street from the Indian Wells Tennis Garden, this highly sought after gated community of La Quinta del Oro, homes in La Quinta del Oro have always been in demand and considered a rare find. This highly upgraded luxurious home offers nearly 2,700 spacious square feet and features numerous upgrades throughout and is reasonably priced at $415,000. I work closely with Travis at Bank of California. When Travis pre-qualifies you and you bring the qualified letter to me, along with written proof that your down payment cash is in your bank available to be placed in escrow, I'm able to treat your offer on the property just like a total cash sale. This gives you the same advantage as anyone who brings an all-cash offer. I can be reached at 760-880-6037. Thank you for your time and I look forward to working with you.
To show you how much of a difference a larger down payment can make in your monthly payment, it's startling. I mean, it's almost $500 a month.
Absolutely.
Okay, so we're looking at the same $250,000 house, and this time you want me to put down 20%.
Well, for the borrower that has more available capital
Right.
to put down on a property, it's definitely going to benefit you because the most wasteful thing in the mortgage industry, and sometimes it's necessary, but the most wasteful thing is mortgage insurance. And anytime you're in an FHA loan, people want, they want to get out of that FHA loan as soon as they can because they're saving that $240 just on the mortgage insurance.
Because you're not putting a lot down.
Right.
The more stable you are, the harder you work to save your money, the bigger down payment, the more money you're going to save flat out.
Absolutely.
And your monthly payment's going to be almost $500 less with this conventional loan. It's going to be like $1,043 a month.
Right. The original payment we discussed with the FHA loan was $1,478.
Yeah, well, that's almost $1,500 a month. So we're saving some money here.
Right. Now,
so it's important. Please be prepared to work hard, save your money, and get yourself into a good loan. And that's where Travis will come in. He's going to do everything he can to help you.
Another option that we have at our bank is what we call the lender-paid mortgage insurance option. So it's a conventional loan where you're not quite putting down 20%, but we offer a program where we buy the mortgage insurance for you. And it's a one-time what we call a single payment premium policy that we buy on the loan. So you can put 10% down.
As opposed to the 50%, as opposed to $50,000, you put down $25,000.
Exactly.
Okay, so I'm saving at least some upfront money there. But what's it going to cost me to pay for my mortgage insurance ahead with you?
Well, you're not paying for it. We're paying for it. It is an adjustment to the interest rate.
Okay.
But there is going to be no mortgage insurance. So ultimately, it's a less expensive monthly option.
When you put less money down, in this case it's 10% instead of 20%, and you absorb the cost of the insurance for mortgage insurance, it's got to come out some way. Right. And so it's all a balance. So you have less money in, but you're going to pay a little more on the monthly payment because your monthly payment's going to go up about 0.5 percentage point in the interest rate.
Right.
So it could go from 4.75-ish to 5.2-ish. It all depends upon the day you call Travis and lock your loan in. That's just how it goes. So anybody says they can guarantee you something,
There's no guarantees
there's
in
no
this business,
guarantees.
not at
There
all.
are no guarantees at all. But once he gives you his word and sends you the paperwork and writes it down, that's a guarantee.
Once you have that pre-qualification letter in your hand, that is a guarantee that you qualify on the basic minimum standards for the Fannie Mae, Freddie Mac, or FHA guidelines.
Okay, so there isn't anything anybody else can do that you can't do, and you can probably do it faster, more efficient, and you'll like talking to him.
Hello, my name is Anne-Sophie Hug. I'm a realtor with Saxony Real Estate. I have lived in the Coachella Valley for over 20 years, and I know the valley extensively. I encourage my clients to visit properties in person, and I am a huge advocate of open houses. I'm extremely motivated to help you as a seller or a buyer to achieve your goals. Here are two properties. The first property at Desert Park Drive is a new 5-bedroom, 4-bath home in the heart of Indian Wells, which hosts a number of outstanding qualities. 9-foot-high ceilings throughout the home, a large courtyard patio with a pool located between the guest house and the main house, walk-in closets, custom landscaping, and so much more. This is a must-see, priced at just under $1 million. The next property at 2 Vista Santa Rosa in Rancho Mirage is an exquisite 6-bedroom, 7-bath horse property off the prestigious and well-known Clancy Lane, which resides on approximately 1.5 acres. This property has 2 pools, one of which is a lap pool, a tennis court, multiple patio areas. It is a 2-story residence with panoramic views of the mountains. This is a unique property for the desert, with endless possibilities for any lifestyle, priced at $2.89 million. I work closely with Travis at Bank of California. When Travis pre-qualifies you and provides proof of cash down payment ready to be placed in escrow, doing so will allow me to treat your offer like a cash purchase. This gives you the same advantages as anyone who brings an all-cash offer. Feel free to contact me anytime at 760-408-5504.
Let's talk about the one thing that there's a lot on television all the time. A reverse mortgage, as I understand it, you have to be 62 years of age or over.
Correct.
You have to own your home, and you can have a mortgage on it, but you have to have equity.
Correct.
Okay, so you have to have equity in your house.
Correct.
So let's go on the basis that I have a $500,000 value in my home, and I owe $100,000 on it. So there's $400,000 in there in money that I could get a piece of.
Actually, on a $500,000 house, there's really going to be only about $200,000 left in there, because the number we're looking for, the safe number to go with, is about 60% loan to value on what you already own on the property, or owe on the property.
Okay, so I've got $500,000 house, and I still owe $100,000 on it.
Okay.
So that leaves $400,000. And the
That leaves $400,000 worth of equity.
equity, right, but
Now-
and the reverse mortgage will allow me only 60% of that value.
Correct, and that's not a set figure.
No, again, it varies.
Right.
So we're looking at, let's say, a $200,000 cash in my property that I could have
Potentially.
potentially if I did a reverse mortgage.
Correct.
Okay, is it complicated?
It's not complicated. In fact, that's the absolute easiest loan that we do. It's the simplest guidelines. There's no credit qualification. There's no income qualification. The only thing we need is proof that they own the property, an appraisal on the property, and the type of program that you want to go with.
Whether you take it in a lump sum or you take it in monthly payments, and there's some variables on that.
Correct.
Okay, so, but I get to stay in my house even though I've
Absolutely.
kind of sort of sold it?
You didn't sell it.
I didn't sell it.
No, you didn't relinquish any equity or any rights to that property whatsoever. And a reverse mortgage is almost identical in the process to an FHA loan. It's a federally insured loan. You own the property just like you would with an FHA loan. The only difference is they're paying you instead of you paying them.
So I don't have to make a mortgage payment. I do have to pay my taxes and maintenance.
You do have to pay your taxes.
And that's
maintenance.
it.
And you have to live in the property 51% of the time.
Right. So, and then when I finally pass on, it's in my will that the property then if my relatives want to buy the house back from the reverse mortgage company, like
Correct.
y'all,
Correct.
they can do that. If
Right.
not, it goes, you keep the house, and
Right. And
nobody
we-
owes anybody anything.
And we're happy to help the heirs refinance the property out of the reverse mortgage. And they have up to a year to do so.
So there's a whole bunch of things you can do, and the key is finding somebody who knows what they're doing, which is Travis, finding a company like Travis has that he works with that owns the money. You don't want to work with somebody who says, well, I'm a broker, so I'll go out and find the money for you. He has the money sitting in the bank. And the minute you go through the submission process and give him everything he needs, and he'll help you with it, he'll walk you through it, you're good to go. And when you call up Travis after the initial introduction and everything, you may hand him over to your sales qualifying partner in there. Is it Ryan?
Ryan, we have several people that,
Right.
that help me out.
And they'll help you and you can always talk to Travis.
I'll always be available.
And you've got his cell phone number, and always talk to him, and we're good to go.
It's a direct line. It finds me wherever I'm at.
Yes, it does find him, trust me. And is there anything else other than the fact that you're the money? And
Well, like you said, we are the money. And we do have a wholesale department also, and our wholesale department's great. We are still one of the fastest in the industry on the wholesale side when you're dealing with a broker. But when you're dealing with a broker, the fact is it's a middleman. You're still working with a middleman.
right, and we don't want to work with middlemen.
It
We
takes
want to go
longer.
directly to Travis, directly to the bank, get the answers you want as fast as you want, and you can get into your home or refi your current mortgage so that he can get you the best deal possible. The examples, we have a few more examples of homes and what their prices are, and we're going to continue to show you those on a regular basis. And if anything changes, we'll bring you some new and updated information. But understand, like you said, it changes every single day.
Pricing changes every single day. Guidelines change
The gu-
periodically.
Yeah, but what you see is what you get here. And I wanted to introduce your parents, Jerry and Janie, and your little
My niece,
your
Kalia.
niece, yes. And I wanted to thank them for letting me just give a very casual atmosphere here, because I remember when a loan officer would come to my home and sit down with me just like this and tell me what I can do and how I can do it. And that's kind of gotten away from that. But I want to know if in a real pinch somebody wants to meet you, you'll come meet them. You'll come to their living room or their kitchen. You'll sit down just like this.
Absolutely. We want you to have as much knowledge as possible. We want you to be comfortable with the transaction. We want you to feel like you knew everything that was going on, that you were involved in the process without having to do any work.